Like every Tuesday and Thursday, we answer all your mutual fund related queries. Before we do that, a check at the markets. So volatility continues. In fact, the Nifty is lower now off the intraday highs, but also off the intraday lows. As we speak, it's hovering back again, made a dash towards the 10,900 mark. The mid-cap index too has come off the highs of the day. A couple of the stocks which are taking the Nifty lower as we speak. We have Bharti Airtel, which has slipped to the low point of the day. Remember, there is a board meet to consider fundraising for Bharti Airtel. So important developments out there that need to be tracked. Along with that, we have HUL2, which has slipped to the low point of the day, and ICICI Bank. That is the one that should come up for you. That's taking not only the Nifty, but also the Nifty Bank lower. So volatility continues. In these volatile times, you have to keep an eye out on the mutual fund investments and SIPs. First up, all the top stories, and then we hand it over to Sumaira. Market recovers from the lows, but still in the red, and now off the highs. Outperforms global markets, though mid-cap and small-cap index outperform. Global guru Mark Mobius says India could decouple from the global growth slowdown, believes India is the top market to invest in 2019. We told you first, and now it is confirmed. Government tables the second supplementary grants for additional 41,000 crore rupees to recapitalize PSU banks. The government official tells CNBC TV 18 that the recapitalization for the PCA banks will help them exit the framework without actually tweaking the norms. Aluminum stocks like Hindalco, Vedanta lose in trade today. LME aluminum prices sink to a 16-month lows after the US says they will withdraw sanctions on Russian aluminum producer Rusal. Two important board meetings to track today. Bharti Airtel board to consider fundraising, while Jet Airways board will discuss fundraising as well as look at a final restructuring plan today. And thanks to digitization and higher loan growth, cost-to-income ratio will come down to 40% by FY21 and 45% by FY20. That's the word coming in from SBI Chairman Rajneesh Kumar, who also expects loan growth at the upper end of the 14% guidance in the current year. All right, with that, just keep an eye out on the markets. Like I'm saying, there is a fair amount of volatility. We spoke about Hindustan Unilever at the low point of the day. Titan 2 has come off the highs. Along with that, we have Z, which had been falling for a fair amount of days and now currently is back in the red after being in the green. So this week itself, Z has lost about 6% of its market cap. A spate of downgrades continue for that stock. For the last 4 months, we've been seeing downgrades come by for Z. And apart from that, a couple of these pharmaceutical names also on your radar. The Cipla, as well as I think apart from pharmaceutical stocks, Reliance, that one too is at the low point of the day. A couple of these mid-cap stocks which are now losing, they belong to the realty sector, so the realty index should come up for you. That one too is at the low point of the day. And Dish TV is taking it on the chin, currently down about 1.5% from the highs of the day. Along with that, we have SAIL, Balkrishna Industries, Voltas not doing too well as well. So it's interesting to see what the bank Nifty is too, because 27,200 is a threshold level. There was a fair amount of put writing at 27,200 for the Nifty Bank. Remember, it's the Nifty Bank weekly options expiry. It has been facing some resistance there. Let's see whether it goes ahead and crosses that or not. 27,200 to 27,500 was the range for the Nifty Bank. With that, I believe we have Sumaira with us and a mutual fund guest to answer all your mutual fund related queries. Sumaira.
That's right, Mangalam. Thanks very much for that. Kaustubh Belapurkar of Morningstar India joins in as my guest this afternoon. Hi, Kaustubh. Good to see you again. We have quite a few queries actually to deal with today, so let's get to it right away. I believe we have a first caller. Bijayant Kumar is on the line with us from Bengaluru. Hi, Bijayant. How can we help you?
Yeah, so as you can see, there are some SIPs are running. I mean, I have been running it from...
By some, you mean time. Quite a few, right? I think you have, what, 10 or 12?
Yeah, I guess so. It's around 40 to 45K per month. I guess I'm investing it right now. So just wanted to know whether those are good, or should I continue in those schemes as per my current SIP amount, or should I look for it to consolidate and just concentrate on 5 to 6 or something like that? As far as that, total investment is concerned, so that's fine for me as of now. And I'm looking for around 10 to 12 years of horizon, because since we are working in IT, so we never know what is, going to happen and all those kind of keeping in mind. No such goal, just I want to, retire rich. That's it for now.
Well, at least you're brutally honest, if anything. So, Bijayant, looks good. How long have you been invested in these schemes?
This scheme, I think some of them are like from 4, 5 months or 6 months, and some of them are from from last 2 to 3 years.
Okay,
so the lower amounts are from last 2 to 3 years. The higher, like 4,000 or something, they are from 5 to 6 months.
Okay, so as of now, tell me if I've got this right. You have invested a little bit over the last 2 to 3 years. A bulk of it has started only in the few months of 2018. You will be working for another 10 years, which is what your investment horizon is as well. At the end of which you're looking to collect a corpus, which you haven't identified yet, but you expect it to be sizable. So, Bijayant, a couple of things. To me, your portfolio actually looks very, very wieldy. Kaustubh will actually get into more detail in that. But I wish you would come up with a figure that, you'd need at the end of 10 years, because that will really help us work backwards to sort of filter your portfolio and tell you, the kind of schemes that you would need or whether or not you're on track to meet your goals. Retiring rich, as super as it sounds, is pretty vague actually for now. But Kaustubh, your comments?
Yep. So I think, Sumaira, you've touched upon some of the key aspects, and I'll probably just get into more details, right? So if I look at the list of funds, yes, some good funds, but again, probably a little over diversified. So, some of the quick kills that I can, talk about are clearly, he's got 3 ELSS funds. Clearly, you can consolidate that into one. That's really a quick kill that you can really look at. When I'm looking at his overall portfolio, and I'm just looking at the breakdown of his market capitalizations, he's got funds that are, mostly towards the large cap sort of side. And given that, at least from what I understand and his time horizon, I think he can take on a little more risk, and that'll help him retire a little more richer, given that he has at least a 10-year time horizon. So I would recommend that, moving another about 10% of his SIPs into a mid-cap or a smaller mid-cap sort of strategy. So there's some names that, we mentioned. He's already got an investment in HDFC mid-cap. Either he can top that up, or he can look at some of the other names, Franklin Prima or a Mirai Emerging Blue Chip, where he can add on to get a little more risk exposure, because he's currently, I think, slightly underallocated to that segment. Obviously, like I said, 8 to 10 funds would be great. So if he cuts out a couple of ELSs, he's in that ballpark. Don't really think any of the funds are, would need a rejigging in his portfolio. I think they're some well-managed strategies, so I don't have a problem with that. So the other point that I would note is that he's got one of the infrastructure funds in his portfolio, about 7.5%. Again, he should be cognizant that that is going to be a fairly high beta volatile strategy, just given the space it operates in. So clearly he needs to be ready to, weather that kind of volatility. But yeah, otherwise, it's a tempered exposure. It's not a very large part of his portfolio. So I'm happy with him holding on to that.
Okay, this consolidation in the ELSS schemes, do you mean he redeemed some of them, or because I'm assuming he'd be locked into all of them right now?
Yes, so clearly, he's got to hold on for 3 years. He can't redeem any of that. But what he can do is probably, just move all his future SIPs henceforth only into one of these schemes. We really like the Axis long-term equity. Not that we don't like the others, but that's Axis long-term equity is one of our favorites, and he can, that's one potential area where he can invest into.
Okay, and that is also, should he require tax saving? For that purpose entirely, right?
That's right.
So, Bijayant, you've heard Kaustubh's opinion on the funds itself. For ELSS, don't redeem right away. Check your lock-in, etc. But start moving all of that money into the one that Kaustubh has mentioned, and use it primarily for your tax purpose and not actually as part of your investment portfolio. I hope that works for you.
Yeah, thanks a lot. Just while we go away, just one query I have.
Sure.
So, sir, for ELSs that he told me to consolidate, so will it be a good idea to go for a Reliance Tech Saver or Aditya Birla Sun 96?
I think he's already mentioned the Axis fund.
Yes, you already have the Axis long-term equity, Bijayant. So you can just continue to invest in that strategy. That's a great strategy.
Okay, cool.
Okay.
Thanks a lot.
Bijayant, thanks a lot, and I hope you will put a number to your goal. That'll help you. That'll help your portfolio even better. All right. Up next, the query comes in from Selim Yusuf Rahman, who's on the line with us from West Bengal. Hi, Selim. How can we help you?
I want to know about my fund. Is that okay for long-term investment, or need to change something?
Okay, so you're 26 years old, so you've just gotten started. How long have you been invested in these funds? Selim, can you hear me?
Yes.
How long have you been invested in these funds?
Near about 17 to 20 years.
17 to 20 years?
I think that's going
Okay, I think that's the outlook that you have. You want to remain invested. Okay. Kaustubh, he's looking to create a retirement corpus of about 5.5 crores. He has, like he mentioned, 20 years and perhaps a little upwards of that. What would you suggest?
Yeah. So a couple of things, right? So he's got a goal of 5.5 crores. I think the time horizon actually had mentioned was 30 years when he had asked us that question. Now, if I look at his current SIP, which is about $7,500 a month, and if you just kind of extrapolate that over a 30-year period, when he plans to retire and build up 5.5 crores, clearly this amount will fall significantly short of the 5.5 crore target that he has. So what he really needs to do is first start to increase his SIP amount by about a 10-15% every year. And if he does that and stays invested in the equity funds, he should pretty comfortably get to meet his target. That's more on the overall portfolio level basis. The other thing that I would recommend, I don't have a breakup of the way he's allocating. Actually, I do. But if I just look at a good, reasonably concentrated strategy, you've got a Mira Asset India Equity, great fund, L&T mid-cap from the mid-cap space. He's got a small-cap fund, clearly more towards the risk sort of side, given the modern mid and small cap exposure. But again, we're comfortable given the long time horizon that he has. The other question I think he had was also on the Aditya Birla Pure Value, given that, there's been a fair bit of underperformance for this fund recently. But, I think that's understandable because you see the space he's operating into. Mahesh, who manages the fund, clearly he's got a large sort of mid and small cap bias in this portfolio, and we know how those stocks have corrected. So I'm not surprised that this fund has fallen significantly more than its other value peers, which are more towards the large cap side. The other good thing that a value fund does, and we've spoken about this in the past, is that it brings in an element of diversification, into the portfolio versus the growth stocks. I'm comfortable with him holding on to that. And the last one, obviously, he's got some sectoral exposure, again, limited. But, I would just take that a little bit of a pinch of salt because pharma is a sector that's been very hard to call even for managers. Yeah. So I would think a little more about continuing with that simply because, is that the right sector? That's not an evergreen sector that's going to remain. So it's something that he'll have to switch around. And I'm not sure if he wants to keep doing that, then he's better off moving that money into a diversified equity fund. That would be my recommendation. Because pharma's been here and there. It's been very, very stock specific. And even managers are kind of in two minds regarding this.
Yeah, unless, of course, he has some special affinity for pharma, which we don't know about. But Selim, I hope that works for you. All the very best. And I hope you're on track to meet your goals. Up next, Mr. Ganesh Shenoy has written to us from Mumbai. He's 55 years old. He's retired. He is actually one of those ideal investors. And thank you, Mr. Shenoy, for actually sending us such a detailed query, because the more details you send us, the more it helps us in actually identifying your weaknesses, your strengths, and therefore helping your portfolio likewise. So he has about 30 lakhs in mutual funds, which he has spread across the entire gamut of funds. So he has large cap, mid cap, multi, value, hybrid, and a debt fund as well. He also has about 40 odd lakhs pure equity. He has bank deposits of about 26 lakhs. Now, this is what he needs a help on, is that he's going to receive about 25 lakhs. He's going to receive some money, of which 25 lakhs he wants to put in mutual funds. Now, what he needs, his goals, he needs in about 3 years' time, 25 lakhs in today's value. Every year, henceforth, he needs 4 to 5 lakhs for his vacation. As well, he has a monthly pension of about 32,000, which he says is sufficient. He has no other liabilities apart from this. As well, he has term insurance. So it looks like he's covered all bases, and what he needs now is just a pure investment advice. So even though he's retired, he looks like he has a pretty decent risk appetite.
Right. So absolutely. And, I'm very glad to see the level of detail that's come in. And I think, Mr. Shenoy, your portfolio is fairly sorted, but I'll just make a few comments, right? So one is, I've seen the comments that you made that you have enough to take care of your monthly sort of, expenses. You don't really worry about rent because you own a flat and things like that. So that's great, because then you don't really have to worry about this investment portfolio generating a regular income for you to live off in your retirement days, which is almost like an ideal scenario to have. But just a couple of notes on this. So, currently, if I look at your portfolio, it's about 70-30, 70 equity, 30 debt. And you do have a short-term requirement of 25 lakhs for your daughter's wedding in the next 3 years. So I would clearly say that, the 30 lakhs that is coming in for you now, I would park a large part of it basis for that for a goal. So if I just do the math, about 21 to 22 lakhs needs to be parked into a short-term income or a corporate bond fund, which would grow to about 25 lakhs in 3 years with a reasonable amount of certainty, which will take care of his goal. So I'd be allocating a large part of that, to the fixed income proportion of his portfolio, which would then kind of make his portfolio even more balanced. That's largely because of the short-term nature of his goal. Yeah. But the rest of the portfolio, I think, it doesn't really need too many tweaks, to be honest, given that, this money is purely investment, and doesn't really need to be used for monthly expenses. I think I'm very happy with the current allocation. He can continue to stay invested as he likes.